if you're in a short trade or thinking about taking a long trade, you better watch out, because in today's video, I'm going to be telling you where the highest probability that the Bitcoin price is going to move to. So without further ado, let's jump straight into it. And you're watching the Isaac Finance Show. So we are here on the charts right now. So what we've seen is quite a large jump since the last video I did, which was yesterday. And actually, in fact, how long has it been? It's been about 42 days since we put in the top, and we're subsequently falling down where we're cascading right now. So in what we were looking at last video, we were specifically at this point of interest. Now, I've been highlighting these very key points of interest during this entire time we've been going. So specifically what that was the lows of here, the lows here, which we did find a bounce here. You can see we had support, but we rejected from that. And we were looking at that level at 107,400 in the video during that date, which we then found significant resistance there. And that's now caused a giant fall. So what are we looking at right now? What are the levels I'm looking at? And how am I positioning myself in this current condition? Because it is absolutely insane. Well, it's not insane, but it is quite a drastic fall, isn't it? So if we jump straight onto the levels and what is pointing out to me, right? So monthly would be the first thing I'll be looking at. So we got a major resistance here coming at 114. That's irrelevant now since that's out of the ballpark of where we're going to be heading. So to the downside, we've got $82,000 for our first monthly level. If we slap on the weekly, we've got one at 78, and we've got one cluster there at 114 too. So that's very similar confluence up at 114, and then 82 to 78 is quite a large deviation there. So we're going to refine and see what has importance. Let me just chuck these blue light blockers on. So if we move to the daily, we can see a fair few things become clear here, because then we start to see an aggregate cluster down at 83 to 76, and which is going to be very important because I'm going to be showing you why that has a very high likelihood if we lose a certain key level, which will be very important, I believe. So right now we're generally in no man's land, besides the fact that we do have a larger range, which we are in, and is really the last marker here in terms of holding that support line, and that's sitting at around $90,000. Okay, so we are sort of straddling the line here, trying to find that support to break back in. The next resistance after that would be 96 if we were to break into that. It isn't looking too great, but we'll have to take it as it comes. What we saw here, specifically yesterday, was the drawdown beneath the POC. We didn't even find support on it. That being said, we found resistance on it when we came up. So let me go back to the daily. We came back to the POC, found resistance, and then flushed the downside, which in terms of a percentage was about 5%, taking out all these lows down here. We did have a few long trade opportunities during these lows. If I can even zoom that in, we'll just highlight that one specifically. Let's see. Yeah, so it was one here, and one here. Obviously, that was very small. And in terms of percentage bounce, that was around 2%. So those are valid scalp opportunities. Now, the key thing which I want to raise here is, I truly believe if we lose $90,000, our next point of interest is going to be much lower, coming in at 84. Well, it's not much lower, but it's significantly lower. So what would that be in a percentage wise? We'd be talking about another 5% drawdown here. So after the fact, it's already been 28% drawdown. Okay, so you'd be 30+% drawdown, which actually does happen in bull runs and is to be expected. But I feel like the sentiment has been flushed extremely hard, which you can see here. Let me actually move that here so you can see. The fact is, though, we can consolidate in these regions for quite a long time. We saw that happen here, right? But that wasn't extreme fear. So we are entering extreme fear. But in terms of the context is we're most likely in a bear market now. We've most likely started a bear market. I'm not going to call it officially because the dead cat bounce will confirm that if we do experience that. But that is a different context to here, which was a 7-month range. And you got to keep in the back of your mind that the global liquidity was still ticking up during that time, and yet the price was diverging, right? So you would expect that to still increase. The fact here is we are in a much different situation in terms of global liquidity. And what we're seeing, yes, it still is elevated, but Bitcoin has taken a large drawdown, which is like, to me, that raises alarm flags. And the fact that we have such large resistance ahead of us coming in at around, well, quite a large few levels here, but I would say that's your first on 106. then you got 111, and then you got 114. So there's quite a large resistance levels to get through to then confirm that we're still on in the bull market. And the reality is we are in that 4-year cycle time frame, which we actually hit on the 6th of October, which was, funnily enough, not what everyone was going to say, but there was a lot of information pointing towards potentially that happening. That being said, it did catch everyone off guard because everyone was looking for a Q1 top at the time. When you look back, if that actually was the top, you had a failed rejection of 2 highs, right? So 3 specifically. That being said, that's not the point of this video. We're going to be going over what's happening and what I'm expecting. So that's one of the key points I'm seeing. I think this level is very key. If we hold this and climb above this, so over the next few days, or we just rock it up, then there's a very high likelihood we do come up to $95,000, and that will be the point where we either look for a short or look to keep the position if you do enter along down here. That would also coincide with resistance, support. So this whole region here, okay? But you can zoom in and definitely highlight the key pivots in that. Now, if we lose this, very high likelihood we're coming back down to these levels because there's a cluster here, there's daily levels down here, and there's just a very high chance that you'd be coming to those levels because after you lose the range, you'd expect to form into the next range, which would be this range. So the acceptance of this range should be $88,000. So what that would look like is a retracement down into that region here, and then you'd be trading into the POC, which would be down here. So if you get acceptance into this specific region, you'd be expecting that. If we do bounce up here, then form, there's a very high likelihood we're going to go up. If not, we're going to go down to this level. Now there's 2 different reasons, or 2 different potential pathways, and that's always what it's like in trading, right? The difference is you're going to have to be looking at what the order flow is doing, what is the interest looking like at this specific level. Are we seeing weak market structure? Now, usually to the point, a lot of people say it's after the fact you'll realize it, which is very true, but you can definitely be entering on confirmed breakout. So for example, what you'd be looking at here is a specific level. Once you break this, I think there's a high likelihood you can hold this one, then you'll be resuming to the upside. If we come up here and reject that, then that's obviously a very bearish sign. So market structure key pivot points are what you'd be looking for. And you'd be looking to run that trade up a little bit higher. What was the level there? Specifically, you'd be looking to run it up to potentially $96,000, which would be a 6% increase in price. Vice versa, we come down here, you'd be accepting into the 5% drawdown into that region, which are then expected to sort of range for a bit and then resume up. So a dead cat bounce definitely has to come unless we experience one in a lifetime situations where we just nuke all levels and come all the way down. I would say that's very unlikely, extremely unlikely, considering that we have key support here. We've also got a various few metrics showing momentum is starting to phase out of this move, and I'll show you that in a second. Quickly moving on to local clusters, we can see that, yeah, we had that one. Well, we got a few to the upside. We've washed through this one. So you can see here at this level, we found support, rejected down. The next one really is down here and here. So that's 90, that's 87 and 84. I'm more interested in 84 because that does coincide with a few of these other important key levels that I'm looking at. Swing low positions, the 84,000, 74,000, certainly swing low I'm looking at here. However, I think there's a lot to bust before we get there. So it's sort of irrelevant at this point. Now, moving on to the order flow. What are we seeing specifically here? Well, during this entire run down, we've been seeing positions enter, positions close. But overall, one would say that we've been seeing, yeah, I would say longs closing. So at any given point from this perspective here, you were seeing a lot of positions close in the market, specifically today's drawdown. So you had an open interest decreasing, CVD decreasing. So your delta's going down, but your open interest is going down too, which is a reflection of market orders in the market, right? And there isn't any divergence here. So it's not showing that we're having bullish divergence or anything like that. So it's just showing that long positions are just genuinely closing out of the market right now. What does that mean? It's more neutral, if anything, and I wouldn't say it's highly bullish nor it's highly bearish. We are seeing a bit of a local bounce here. If we just highlight that, what that looks like is this. So obviously that price has gone up 1%, right? So if we do hold that, and obviously, let me zoom in here. Let me have a look at what we're looking at in terms of volume. If we do hold that and we can successfully claim above this and hold up here, we're probably going to bounce off this if we do go up and then hold this high, then there's very likely we do resume up to that higher level. If not, two different cases. We reject here where we are, come down, or we reject here and never find support here, then we'd be going down further. So that would be what I'm looking at specifically right now. In terms of my positioning in the market, I'm not in any positions right now. I'm waiting for specifically to find that support. And if we do find it here, then I'll take a position. If not, I will wait for lower. Okay, so that's how I'm positioning myself in the market right now. I was short up from here, and I think I took another short here, and I took a few scalp trades, and I've closed it prematurely. And to be fair, I didn't expect a drawdown this much, but obviously that's the market does what the market does, right? Lastly, what I want to show you is the market or indicator here showing momentum. Now, this is a conglomerate indicator. It combines various indicators, gives you a good point of view as to what the potential drawdown in what we're seeing. So every single time it's flashed a green in a weekly, most of the time, not every single time, because you had small levels here, like here, here, here. Specifically, the larger ones like this, it has signified a very pivotal bottom. Now, whether that bottom comes in here or a bit lower here, I think this will print and have a green down here. Now, that is priming for a very, very good position to be in the market, right? In the fact that you're going to have some sort of bounce, whether it is a 10%, a 20%, or a 30%. Regardless of the fact, it's going to be a good position in terms of even a scalp trade, right? Entering a scalp trade. Because a bounce will come. And even throughout previous market phases, you do see bounces. So a significant bounce was here in the bull market. We had a 20% rise. Significant bounce was here in the bear market, sorry. 30% rise. So there's opportunities even in bear markets for key pivotal long opportunities. And that's going to be a key pivotal long opportunity if we do go lower, or even if we do find support where we are now. Because from a sentiment perspective, we're exhausted. And price, I believe price is going to have to find a bottom soon, because this is quite unsustainable to have this much selling without any sort of support being found. So you know my levels, guys. Specifically, if we hold here and we've claimed that and resume up, that's obviously very good. But in terms of the confirmation, like I said, you can go back and see how I was going to talk, what I was saying there. And then specifically the levels here at 83,000 to 82, and then we got 79. But I would say I'm more inclined to look at this cluster here, because we do have that large volume that is aggregated around that point. So that's going to be very key. Specifically here highlighted, we can see that that comes in around 84 to 82. If we do capitulate that a little bit further to take more positions out of the market. And that's going to be over the next coming few days, or it might even be tonight, right? So that's what I'm looking at. I'll catch you guys in the next update. For now, have an absolutely awesome day. And that's it from me. I'll catch you in the next one.